Good evening, guys. How are you guys doing today?
We're okay, thank you, Brian.
Good, good, good. So yeah, without wasting any time, I really like to get into the business of today. So what I want to do is start off with questions for those of you guys who have questions, and we'll take it from there. So if you have a question, and after that, you get to ask me a question. So like on to you right now, no? So I just quickly muted everyone right now, so you can go ahead and unmute yourself so that you can ask a question.
Hello, can you hear me, Brian?
Yes, I can hear you. What's up, man?
I want to know how you calculate your leverage, how you know the lot size to use for the account balance, because you said you were going to send a video to that effect to show how to do the leveraging.
Okay, let me double check. I haven't sent any video, no? Let me double check.
What you said was you're going to show how
Didn't I send a video of position size? I remember sending a video of how to calculate a position size.
I don't have the. I think that was for gold, not like currency. I don't know.
So there's this app that I have here. I'll have to send it again. The FX calculators where, because I cannot really show it here. I can only like illustrate with the video on my phone. So that one, but in terms of that, that won't be any problem. So immediately after the live, I'll be able to do it for you now.
Like, are you going to make like a new video and send over? Because I don't understand.
I'll send over the other one. You said you didn't receive it, right? The first one that I've sent.
Yeah, I don't understand it because I think it was gold. That's why.
Okay, I will send for a different way so that you can understand. But after you receive it, if you don't understand it, you definitely have to ask me a question with regards to what I've sent, so that you make sure that you understand what is happening.
Okay.
All right, yes. Let's go to the next one.
Good evening, sir.
Yeah, what's up, my king?
My king, I love the work that you put on YouTube recently.
On YouTube? I'm not on YouTube, my king, eh? I haven't opened any YouTube channel. Maybe people document
that meeting with Chima.
Oh, yeah, the interview. Okay.
Yeah, great stuff, great stuff.
No problem, Mike. What's your question?
So recently, what I was doing on NAS 100, I was opening one lot sizes, like one standard lot. But I noticed that when I open a 0.11, I could open more lot sizes, and then I was able to open 40 positions as opposed to 2 positions with a one standard lot. So I wanted to know, is there an advantage to opening 0.11 40 times as opposed to one standard 2 times?
So that's just a thing of, at the end of the day, you post this, you open the same thing. So what will be the difference is that when the market fluctuates, you won't enter the same thing at the same price with all 40 trades. It's impossible to enter it unless if the market will be stuck in one position. That's one thing. And it is very advantageous in a point where all your things cannot be wiped. So meaning, even if, let's say, for example, if you go into profit and take profit for a couple of trades, and after that the market goes against you or return to the entry position, you won't be, or whether these news events, they wipe out your trade. If they can wipe out your trade one by one with certain, with the entries that you have placed, it will take them time, or there's some that can be left, whether there's high volatility or anything of that sort. So it is there, but like the advantage is not that highly. It's just a matter of working with what's convenient to you. Because imagine you cannot be adding trades 400, 40. Imagine making each and every time you make a re-entry, you're adding 40 trades. That's something else. You're going to close your trades until you'll be pressing same buttons over and over again. So better if those 40 trades are divided into about 10 re-entries, then you know that if you close 40 trades, they will close all the trades that you made. Now, if you have to press 40 trades, 80 trades, 120 trades, you cannot close 180 trades with just this three re-entries. That's just too much, making. That's too much. So you just have to keep it convenient in a way that you're also leveraging, but it's at the same time convenient.
Thanks. I appreciate that answer, man, because that's something I've thought about. I mean, using MetaTrader on your cell phone, it's harder to close trades, especially a larger number, you know?
Yeah.
So, yeah. So I was thinking it's better to use a higher lot size so that you keep your entries or your positions to a minimum number. As you use
you can always use two. Maybe you can only calculate the lot size and divide it into two. You know you're going to use 2 trades per re-entry. That's fine.
Understandable.
All right, cheers, man. Let's move to the next one.
Thanks, my king.
All right, cheers, man. Is
Hi,
there
Brian.
anyone else? Yeah,
Hi,
what's
Brian.
up, mate?
How are you doing today?
Good, and you?
I'm very well, thank you. Thank you so much. One thing I noticed is that when I draw my footprint on first layer, sometimes I get into early, price continue to go down, but then it reverses if I'm in a buy trade, and then it start going up. Can you just show us on the chart how to spot our entry so that we don't go in too early into the trade?
Okay, so I couldn't hear you perfectly there. You said
so when I draw my first layer and footprint, sometimes I notice that price continues to go down when I'm on a buy trade, and then after a while it reverses and then it goes up. So most of the time I enter too early. So I want to fine-tune my entry so that I don't enter too early, so that I don't have a large drawdown before it starts going up, or vice versa. So if you can show us on the chart how to enter.
So what is happening? Just a simple thing of spotting footprint, first layer. So what the problem you're having is that sometimes you enter way early.
Yes.
And do you normally follow the steps? Okay, let's do this. Let's find a chart that is something we can.
We can analyze good.
Okay. check out gold then.
For gold, I think I am on a sell, but I think it started going back up, so I entered too early.
Okay, so what you're saying is that you want me to show you how you can be able to enter way much earlier into the market, or is that what you're asking?
How to enter properly into the market.
Okay, first of all, let me just simply break down everything. So here we're dealing with the footprint, and normally the pattern that we look for in the market is this. So now, knowing that we want this pattern, there's a line that we draw, the footprint line, which is the first line. And after that, we have the first layer line. After that, we wait for the market to break. After the market breaks that line, we wait for a retracement. So now the retracement we see between these two lines, with those 2 points, we spot a technique that we call divergence in order to make entry. And that divergence technique, we use it everywhere now. And the same thing is here. Footprint first layer, right? After that, after the break, you wait for the pullback. So between the 2 points, what we can use this point, but as long as there's a divergence. So if you can be able to see, if I connect this point and that point, I'll be able to indicate that there's a divergence there. And also from here to there, there's a divergence. So I can use this point, and this point, this point, and that point. So this is a divergence technique that we use to make entries. Now, final thing is obviously checking the crossing over there. After the crossing over happened, you're going to be entering a buy there. So how do you, this is how you go about it. And just a spotting the same thing over and over again. And if you would have also spotted it on the opposite direction before that to estimate this sell that was going to happen, that's what you're going to do. And in order to, on this time frame, the first divergence would be here. From this point to that point. From this point to that point. So after that, you spot the crossing over there. And you can see what has been happening. So everything definitely makes sense. So I hope this answers the guy's questions in terms of how do you go about making entries.
Thank you very much. That answers my questions. I have another question if I ask it quickly. Are there certain, in some certain conditions, sometimes when it breaks the first layer and the price pulls back and breaks the first layer and continues in the downward direction, what do you do in that circumstances?
Try to repeat that. I couldn't hear you.
So when the price breaks the first layer and it goes back towards the line,
okay,
it continues now going down instead of going back up. So what do you do in that circumstances? You just close it.
So first of all, you'll be having, when you enter a trade, you have where you put your stop loss and we have where. So if the market decides to come back down like this, you know that when it comes here, it will be a failed trade.
Yeah.
Or what can definitely happen is that you can, if it has already formed a footprint, you drive in that footprint line. And if that footprint even breaks, you know that it is a trade that it is planning to go to the opposite. Even if the footprint breaks like that, you know that, okay, it is time to spot the divergence and continue taking it into the opposite direction. So you just have control of whether it is going into your direction or not.
Okay. Thank you very much. That explains it very well. Thank you very much.
All right, no problem.
So I have a question.
Yeah, shoot.
In spotting the divergence, do you spot it anywhere or I should spot it on some specific time frames before I enter the market?
Divergence is everywhere. There's no specific time frame.
If I should spot, let's say on the 5 minutes time frame, I enter the market, right?
Yeah, like divergence is every movement has its own divergence. So it's just a matter of knowing how to obviously apply it, and divergence with only when it is only divergence, you cannot utilize it as much as when you're using it with the footprint, because when you're using it with the footprint, you know when to close, you know that for execution purposes, because someone can enter a buy here but not know where to close or what or whatever. So when you apply it with the strategy, when you apply the strategy in terms of footprint, first layer, waiting for the market to break the first layer, and that way you're handling it in a very much productive way.
So if I spot a divergence and I enter the market, I open as many positions I want. If I want to make another re-entry, if I spot it on another time frame, I should re-enter the market again.
What? Repeat that.
If I should spot a divergence on, let's say, the 5 minutes time frame, I open any position I want, maybe about 5 positions. If I want to make another re-entry, should I wait to spot another time frame before I enter the market?
If you're like what you must know is that after you've finalized everything in terms of spotting the footprint first layer and you've already entered your first position, in order to make re-entries, you must know that the lower time frame you go to make re-entries, the better, because you'll be able to enter early into the market. The market won't just leave you, like this big movement won't just leave you without seeing some minor divergences. Like if you go on 30 minutes, you won't be able to enter at a certain position as you would have entered on 5 minutes. So to add more re-entries, you can go to a lower time frame or to any form of an entry, even if the first entry, if you've analyzed on 15 minutes, you can simply go to 5 minutes in order to make an entry.
Okay. Thank you.
All right, sure.
Hello. Sorry. Are you saying basically the entry time frame we find our divergence first is where we take our re-entries?
I'm saying each and every time frame have divergence.
Okay.
So what each and like for example, if you analyze on any time frame, when you want to make an entry based on divergence, I advise you to go into a lower time frame. Why? Because at the lower time frame, what you must do is you must be able to catch the market early, because sometimes you find that it moves and there was divergence on the smallest time frame, but just because there was high momentum, there's no way the market could form divergences on a bigger time frame. So that way you just see a long, big movement, but you can catch those re-entries on a much smaller time frame.
Okay, so you're saying basically if we for example, if we enter our first divergence trade on M15, then if we want for re-entries, we drop down to like M5.
Yeah, you can definitely do that, because on M5, divergence are more. On any lower time frame, you can divergence on 4 hour, you can compare it to a divergence on 5 minutes. Divergence on 5 minutes, it will take less candlesticks in order to formulate. Divergence on 4 hours, it will take days, hours, if not days. So you can see there, with lesser time frame, you are able to enter very much earlier. That's what I'm trying to say.
That's for re-entries, right?
Yes, also the same thing.
Sorry, Brian, too.
Yes.
Sorry, but so I just heard what you're saying. So when you have taken your first entry or whatever entry you were doing, do you remain on that particular time frame, or you go back to the time frame that the time frame that you analyzed? Like for instance, if I was analyzing on M15 and then go to maybe M1 to take a trade, right? After spotting a divergence. Now, after entering my first trade, do I go back to M15 or I keep on M5 or on M1?
So the M5, on the M1, what you're doing, you are therefore making re-entries and all those kind of things. And remember, at the end of the day, as the market continues going into your direction, you must be able to spot the footprint and the first layer so that you know when to actually close. So you can go to the time frame that you've analyzed on and be able to wait for the market to give you at the first layer, so that you can draw your first layer and wait for the market to break so that you can close all the profits that you've made.
No, I don't really understand. I'm getting it confused now. Sorry. My question
Yeah.
my question is, are you saying for example, if we take our first trade on M15 after spotting, after doing the analysis, drawing the trend lines, if we take the first trade on M15, if we want to re-enter, do we go down to M5 to look for re-entries, or we remain on M15 to take the re-entries, since that's the...
What I'm saying is that if you're analyzing a footprint on 15 minutes, you can go into 5 minutes or any lower time frame in order to make re-entries and entries, any form of entries, because of why?
Okay.
On a lower time frame, you are able to enter early into the market without the market leaving you that much. And I said, if you want to be able to draw the first layer, which is an indicator that will allow you to be able to close the profits that you have, because at the end of the day, remember, you must be able to close that profit. And as our take profit, it is the breaking of the first layer. That's why I said she can go into the previous time frame, which was 15 minutes, where she analyzed the footprint in the first layer. There she will be able to see the full structure where she analyzed, be able to draw the footprint and the first layer that had been formulated, and be able to wait for the market to break the first layer so that the profits that were made on that particular trade can be taken after the breaking of that particular first layer. Do you understand that?
Yeah.
All right, sure, okay.
For the divergence, during the divergence, the two lines have to be overbought and oversold, or it can be anywhere?
Repeat that. I'm not sure if I got you there.
During the divergence, the first point and the second point of the divergence, do they have to be both overbought or both oversold?
The most important one, it has to be the second point. The second point, which is where you are entering, it must always be at the overbought or oversold. That one is negotiable because that's where we are entering. So we want to enter where the market is really overbought and selling where the market it is really overbought or oversold. So it definitely has to be like overbought or oversold, any out of those two.
Okay.
Hello, Brian.
Hello.
Hi. I wanted to know whether the crossovers are final confirmation for entering a trade.
Yes, definitely. Once you've analyzed, because the crossover, it would, to us, what is actually showing, if you can just be able to look at the activity around we want to enter, that should be the last thing, because of it is the one that shows the overall of what is actually happening. Because if we're including the candlestick patterns and what they were going to tell us the turning of the movement based on what one candlestick is saying. But here we're dealing with a bunch of candlesticks. So the main thing, the best possible thing we can do in order to accommodate the overall candlesticks is focus on the stochastic. And the stochastic represents all these candlesticks, because the stochastic shows the overall movement of all those stochastics. So simple as that. So definitely that's what we lastly confirm with.
Thank you.
All right, sure.
Hi,
hello?
Hi, can you please go to Euro USD? I just want to ask you something.
On which time frame?
H1.
H1 Euro USD. This is the trade that we own. On this one, we still expect it to go down because
My question is,
yeah.
Okay. So you.
I think, on 15 minutes, there must be a divergence that touches the overbought, definitely. We were taking it down. We entered a cell on it.
Okay, can you go to H1? H1, and let me show you how I got it.
Okay.
And I just want to be clarified on something.
H1, yes.
Oh, my goodness. Do you see where you draw your first your line?
This one.
Yeah, okay. I picked up before. Okay, go a bit up from the take it down. Yeah. That was how I got it. And somewhere there, I draw my footprint from there, from
up here.
Yeah, and then until go down here. So my this is the footprint.
Correct.
Which
yeah.
I bought under the circle. I did do a sale under the 0.2. So
Meaning?
now is that. So what I just want to be clarified is that do I still keep, because I'm working on H1, but I did my re-entries and all on the M5. I understand that one. I went to the lower time frame. So now I just understand that because I'm waiting for it to do where I can now draw the first layer.
Mm-hmm.
What is the second line?
Yeah, first layer is correct.
Yeah, the first layer line. Okay, which I think my question was also answered when you answered that this is the trade we're still holding. So my question was, should we still hold? Because I know it will go back so that we can have the first line. And from there, that when it can also determine to us what will happen. I'm not sure if you
right now, I would say it is still very much early. Once you've drawn even the footprint like this, you just have to for the first line. So right now, when we go to 15 minutes, we're seeing a very clear divergence. And it is also for when we go to 30 minutes, we're also seeing the crossing over. So, sorry, it is very much clear. This thing is still going down. So now it's just a matter of waiting for the first layer to formulate. Like once the first layer
what I'm saying.
Is formulated, that's when you'll be able to know when to close.
Okay, I was using the H1. So what you're saying is, should I keep waiting on the H1 to wait for the first layer to formulate, or should I go to the 15 minutes like you doing, or to the 5 minutes I was using to see the first layer if it's formulating, or should I keep staying on the H1 until it goes?
I think you must stay on the H1. The reason why I'm saying that is because of if you go into the M5 or lower time frame, now you analyze this thing with the perspective of 1 hour. So meaning the structure is already big. The structure will be already big. The distance between the 2 points where you draw the footprint is already big. Now if you go into 5 minutes, you will see something like that as very big. You understand? Like something like this is very big. And you will definitely regard that as a first layer. So you'll be mixing two perspectives. And like this one, it will not be as big as you think when you go into the original time frame because of.
So you're saying for now I can keep on H1, but when I do the re-entries and then I use the M5.
Yeah, most definitely M5, M15. But what I know is that this thing where we are still selling it. We are still selling it. You said you've entered here at the top, ne?
Yeah, I entered. I think on the second candle.
All right. Then like how much?
I entered. You see, after the blue one, when the one, I entered there.
Oh, okay. And how much did you secure? Yeah.
Personal.
Okay, no problem. No problem. As long as you're making something though, at the end of the day. But yeah, so far this thing we're continuing to take, I also entered, I hope everyone also entered. So we're continuing to taking it down. So the first layer will formulate with time. You just have to be patient with it.
Yeah, because actually I was working on it before even you send the signal. I was checking on it on H4, and on H4 it gave us the footprint before that. If you go to H4, you can see that we got the footprint long before that.
Yeah, definitely. That's what I was looking at, but there was some consolidation that it gave us a H around here. And I think I set the stop loss, I think around here.
Yeah, you see that up there and down, yeah, it did give us the footprint there.
And so, yeah, even on 4 hour, definitely showing that it is going down. And when we look at the full structure, even the footprint of this thing, even the footprint line of the previous